So if we go back to volume for a second, you can see that why that would be the chosen option if you really wanted to buy real value and you wanted to participate penny for penny, dime for dime, dollar for dollar move in the Qs today. You would buy the least expensive one that you could possibly find with a delta of 1, which specifically matches the movement in this underlying instrument. So you've got a somewhat of a bell curve. Most of the people who trade options trade around the middle. They trade around these at-the-money options, in this case the 57 and the 58 strike price options. The same is generally true for puts. However, since puts are generally considered to be a protection and sometimes a speculation instrument, then you don't quite get the same type of curve, and you don't get quite the same number of contracts traded right around the at-the-money prices. They tend to be a little bit lower than at-the-money because people are either buying protection or they think there's going to be a very quick move down in the market and they want to capitalize on the increased volatility. Increasing volatility will raise the price of an option above its normal value, its lower volatility value, and generally pumps up the price of an option, in which causes the person who purchased it out of the money a profit. And I'll show you exactly how volatility increases the price of an options without in a future video. And here's another example of why generally put options are considered either protection or speculation if the market should crash. You can see that the open interest, that's the number of contracts that are still open but not closed out for this option chain for December with 7 days remaining until expiration, this one has 219,000 open interest. People are speculating that the market will crash. If so, that 2-cent option or whatever they bought it for will rise dramatically. So you get a lot of out-of-the-money options that people purchase for protection. Not so much so on the call side. As you can see, the open interest is relatively much lighter at the higher strike prices for call options. People don't use calls as protection when they buy them. Generally, what they want to do is buy. They want to buy delta. They want to buy the intrinsic value, like the 50 calls, in order to take advantage of the low volatility and the rising market itself. Let's look at some specific examples of how prices will change the price of options. Let's go over to our charts here for a second. We're going to change this chart over to the Qs, and then we're going to pick a time period in which there was some changes in the market so that we can measure the changes in the underlying options. For example, we have a low here going back to June 16th, a low of approximately the close at 53.86. So let's go over to our trade tab, and then we'll go over to our analyze tab, and the Thinkorswim platform gives us actually the ability to go back in time and look and see how options behaved when price changes over time. So let's go back here again. We can see that the June 16th closing was at 53.86. Using perfect hindsight, we know that the market rose. So let's go over to our Analyze tab. We're going to go back in time to June 16th. And at that time, at June 16th, there was only 1 day left on the June option. So let's go over to the July option. And let's say that we go ahead and we purchase let's see, what we want to do is we want to take a look at delta, because I like to buy delta. And with a strike price close at 54.08 on June 16th, what I want to do is I want to buy some delta. I like to buy 88 or 90 delta, so I'll go with the 48, and I'll buy. Let's just buy one contract here of the Qs for July expiration at $6.23.5, which is the midpoint between the $6.12 bid price and the $6.35 asking price. Many times when you're putting in an offer to buy an option contract, you can split that middle, and sometimes you'll get it, sometimes you won't, but you can try. And so we start out now knowing that the market will be rising over the next few days.